This is an Annuity News Update. I'm Scott Drake. The U.S. Securities and Exchange Commission would be barred from regulating equity indexed annuities as securities under an amendment newly included in the Financial Regulatory Reform Bill. The amendment to the Wall Street Reform and Consumer Protection Act, adopted by conference committee members, is a victory for annuities issuers who had sued to block the SEC action. The conference committee included House members who sponsored legislation to block the SEC from regulating the products, as well as Senator Thomas Harkin, who previously sought an amendment to the Senate bill that would have given states and territories sole authority to regulate indexed annuities. Obama administration officials and congressional leaders said Tuesday that the House and Senate would have to reopen the conference proceedings on a sweeping financial regulatory bill after Senator Scott Brown said he would oppose the final version because it contained attacks on big banks and hedge funds. Senate Democrats cannot advance the measure without the cooperation of at least some Republicans. Though it was billed by Barack Obama as the toughest crackdown on Wall Street since the Great Depression, top U.S. banks could be given until 2022 to comply with the so-called Volcker Rule, which is supposed to restrict financial institutions' riskier trading activities. U.S. stocks fell sharply early this week as possible concerns over a slowdown in global growth spurred investors to seek safer assets. Riskier stocks tumbled, and investors flooding treasuries sent the yield on the 10-year note below 3% to its lowest level in more than a year. And in an interview Tuesday, House Minority Leader John Boehner suggested raising the retirement age for Social Security to pay for Afghanistan. Boehner said ensuring there's enough money to pay for the war will require reforming the country's entitlement system. He said he'd favor increasing the Social Security retirement age to 70 for people who've had at least 20 years until retirement, tying cost of living increases to the consumer price index rather than wage inflation and limiting payments to those who need them. For more, visit AnnuityNewsNow.com. I'm Scott Drake. Thanks for watching.